Okay, well, let's get more on this big week for bank earnings. We're joined by Bloomberg analyst Paul Goldberg. Thank you very much indeed for joining us, Paul. Paul, your numbers, excuse me, point to resilient revenue growth. What will be the main sources of strength?
Good morning, and thank you, Andy. There's several ones. One is the interest income, so yield curve steepens a little bit, and that would help, even though the loan growth is kind of sluggish still. The other two areas, which is kind of continuation of what we saw in the first half of the year and the first two quarters, very strong capital markets, and we've seen that continuation from the reporting of the U.S. banks, and a very healthy wealth management, especially that the markets went up during the April-July period.
And you're looking for a pretty big jump in loan loss provisions.
We do, but this is versus the last year, and this is a median number, so we're looking to around 19% or so. But again, this is during the different periods. So the impaired provisions are going to go up somewhat, a modest amount, and the performing provisions, the large reserving that we observed in the second quarter, is probably going to actually moderate sequentially. So there's a mix of those performing and impaired provisions that's going to work into the quarter, and it's going to make quite a bit of a deviation what the bank earnings, the EPS, is going to be.
Scotiabank has been pushing ahead with efficiency cost cuts, but that can bring challenges.
It certainly does. A lot of that comes from a transformation that they're trying to do in the Pacific Alliance area, the international business for them. They're trying to make things more efficient, bring things more into the U.S. and Mexico. So the transition period is taking time. They initially talked about it being last year, and now it's really being this year as well.
What are you looking for from TD Bank? The U.S. asset cap obviously adding pressure. They're focused on, you say, organic gains in Canada, aka not takeover-driven gains. What should investors be aware of with TD's report?
Well, I think the TD report, it's going to be more about the continuation of their progress in the adjustments of the business. So they readjust in their portfolio that should be done or almost done. That's going to add about $500 million of interest income. That's going to be very beneficial for the bank. And that's going to take over and cover some of the costs that they spend in on their AML, the business enhancements they need to do in order to maintain the healthy relationship with the U.S. regulators and the Canadian regulators as well. When we look into Canada, we're probably going to hear more about it at their Investor Day at the end of September. Mm-hmm. There are certain businesses that they will try to grow, but it's always very difficult to grow in Canada. It's a very competitive market among the 6 largest banks in particular.
And just finally, BMO stock hit a record high on Friday. What should we look out for there?
BMO, I would mostly look at the U.S. loan growth and their opportunities to grow, because this is where the Bank of the West and the acquisition and the synergies on the revenue side that they've been promising to deliver. It might still be sluggish, but any sort of green shoots in the U.S. loan growth is going to be very positive for BMO.
Thank you very much indeed for joining us. Bloomberg analyst Paul Goldberg giving us his preview for the week's bank results. Coming up.